Well, it was a strong day on Dalal Street. In fact, a good end to the week. The government's move to stick to the fiscal glide path is something that boosted sentiments. The markets hit record highs on Friday. The Dalal Street snapped its two-week losing streak to record its biggest weekly gain in 2 months. The sensex closed above that milestone 72,000 mark. Hello and welcome to the Editors Roundtable. On today's episode, we decode the RBI's big blow to Paytm. We also ask, is the government's capex cycle spend peaking? I'm Sonia Shenoy, and with me, editors Prashant, Nigel and Nimesh. Folks, it was a really good end to the week. The market at the end of the week, the Sensex gained over 400 points, Nifty scaling new highs as well. I think the street likes the fact that there was fiscal prudence in the budget this time around. A lot of the boxes were ticked, so good end.
Good and exhausting week, right?
Good and exhausting, yeah.
5-day week, earnings, budget, FOMC.
And a short budget, right? We planned
For a long week.
We planned for a 2-hour budget speech and it got over in one. So it was actually an interim budget.
More work for ankles.
It was a short budget for her, but it was a long day for us, analyzing. But yeah, I mean, the interesting part about this week and the budget, I guess, is that, the right boxes were ticked.
Yeah,
whether it was fiscal prudence, whether it was revenue expenditure has been brought down. There were no populist measures this time, So expectation perhaps is that, the government
from
is expecting to come back to power.
From a market point of view, no bad news was good news. That's the way to sum up that from a market perspective, there was no bad news or any bad shock for the equity market. So that in that sense, it was a very credible budget, so to speak.
Absolutely.
And I'm surprised we didn't start by saying that we hit a new high, right?
Yeah.
Although, I mean, it was matter of fact because, we've been struggling 500, 600 points under a new high for a while.
Yeah.
And today, Friday, we hit a new high, which was barely 2 points above the previous high. And then a little bit of cool off. Still no participation in banks. And that is a slight worry point. That if IT and banks, which are the two big areas, don't participate, how long can the index do well? It had a lot of help from Reliance over the last 2 weeks or so. But you need the big guns to fire, banks especially.
Absolutely. And but I'm interested to know what the dealing rooms are talking about. So, Nimesh, what's the chat
for a change, I'll not talk about the dealing rooms, but I was lucky to have been part of that post-budget party. Where all the larger HNIs were there. The room had more than 40, 50 HNIs, and I'll just try to sum up what the mood was like. From a budget perspective, most of them believe that it was a credible budget. Now the hope is that maybe you'll see an India rating upgrade as well. So that was a big talking point, that maybe this whole budget was been done to address that point of whether we can have a rating upgrade from the rating agencies. That was a big talking point there. Largely, everybody in that room seemed to be quite bullish on the market. But there is a largest section who also had a bit of a concern in terms of valuations. Now, again, valuation-wise, if you look at the large caps and on the Nifty and Sensex, they are not overvalued. But a lot of mid-cap and small-cap pocket, the PSU pocket, did find a lot of overvaluations as well. And that was a bit of concern for a lot of investors there. I guess, but still, the overall feedback was that maybe, the leadership in this bull market is with the PSUs, and that's likely to continue. In fact, a lot of investors believe that there has been a genuine change on ground as well, as far as a lot of the companies are concerned, the operations are concerned. So that's why they're liking the PSUs, so to speak. Again, there is an interesting feedback from one of the large investors that one should look at buying the businesses irrespective of market caps. There's a lot of debate that should one buy mid cap or a small cap or a large cap. The feedback was forget the market caps, just buy the good businesses at good valuations. So that was a good talking point. And I guess from here till the elections, the overall feedback is that this momentum can likely continue. The next big trigger for the market would, of course, be the general elections, which would come in May. So that's something to watch out for. But in general, a lot of the HNIs seem to be quite still bullish, and they're not seeing enough signs of market peaking out. So that was, again, a good message that one need to be careful, but there are no exuberant signs of market peaking out at this point in time.
Nimesh, I'll tell you one thing. This time I couldn't attend, but I remember last time, especially for a reason. 1st of February was the budget, and this happened the same day in the evening. That was, if you remember, 31st of March was the bottom for mid caps and small caps.
Yeah.
That is we don't know what happened, we'll never know, but that is for some reason, and then the rally began. But I remember it was complete despondency back then because, stocks had not performed for a long time, and actually nobody expected the stocks to perform also.
But actually, last time, same time last year, the rally actually happened after March 31st. Till March 31st, after that.
That's what I'm saying. 31st of March was the absolute low. If you look at the mid cap and small cap index, that's the low. And 1st of Feb was the budget. Yeah. What I'm saying is that no one saw the huge rally, and indices are up 150, 200% since then. So Yeah.
So let's move on from that party then, and let's just talk about what happened in this week, right?
You want to move away from a party?
I mean, I wasn't part of that party, so that's why I'm saying let's move on. Anyway, let's talk about action this week, right? At the start of this week, we said, well, we're starting off a new series. January wasn't that great, and the January jinx we couldn't break. But the FIs were net short, and that seems to be a good omen, actually, because you look at the April series or the November series, the FIs were net short, and we saw a big rally. In this week itself, the Nifty was up close to around 500 points, which is just 2.5%. But yet, FIs being net short is actually a good omen. Two big cues and both played out well. The FOMC made first thoughts were, hey, he's sounding too hawkish. But, the reaction was that maybe we won't get a cut in March, but we'll get a cut in May. And that's par for the course. And that's what global equities as well started, aligning with. The finance minister, as we said, well, the budget had fiscal prudence and the capex expenditure will continue at around 11% or incremental on a higher base. So the street liked that. For this week itself, the Nifty was up. But the Nifty Bank actually did a relative outperformance. The Nifty Bank was up close to around 3% even after pulling back a little bit. And that's the first time in 2 months that you had in a single week, the Nifty Bank outperformed what the Nifty did do. But the real party was in the small and the mid caps. The small cap index, after seeing such a big rally, was up 5.5% odd. And from the frontline names itself, you had a lot of big names that did well. But the real party was in the small cap index. And forget the Nifty Bank and the small cap index as well. The PSU banking index, forget about stocks. That was up 12% for the week itself. So that had a big rally out there. And from the frontline names, from the PSUs itself, ONGC, BPCL, as well as Power Grid, all of them were up between 10 to around 18%. On the downside, some result reactions weren't great. And some of them larger names in the Nifty. So L&T and ITC, they're larger names in there. They didn't, deliver very great numbers. And the stocks actually were big underperformers. Even Titan did sell off post its numbers. So they were relative underperformers for the week itself. What are the triggers going ahead? Well, next week, we'll hear from the RBI governor. So, some kind of trajectory on that front will be important. We'll have the remainder of the Q3 results. And sometimes the latter part brings you some surprises, sometimes on the negative side. So let's hope that doesn't happen. The FI flows have not yet come back, so we'll wait by. And HDFC Bank, one was saying it's not going to perform. That's okay. Let it consolidate. Don't let it fall more. At least for this week, it was up close to around 1%. So let it just hold one end up and let the non-striker, so to call it, do bulk of the batting. I think that's
so, Nigel, for me, the other big highlight of this week was the fourth accident of the first quarter, right?
PTM.
In 2 days flat, 20% down circuits on Paytm. So that to my mind was something to watch out for, because
absolutely,
incidentally we are getting too many these kind of shockers and accidents which can actually have an impact on the overall sentiment as well.
And we'll get Ritu in later on, to help us out with further analysis on that.
Absolutely. I think Prashant, what are you focusing on this week?
Is the budget really as good as it's been touted to be? I think it's good. The big numbers are all great, but on capital expenditure, there seems to be a sharp slowdown. So let me go across to the big wall and tell you what I'm talking about. And I think, sometimes as it happens, right after the budget, you look at the big picture, but a day, 2 days, 3 days later, people start focusing on some of the finer points, right? This is not that much of a finer point. This is still, these are the big numbers. What I'm looking at is the government's expenditure on capital projects, capital expenditure. And I've broken this into some of the most talked about sectors. And this, these are the last 3 or 4 years, starting from FY20. I've taken out the FY21 number because that is the COVID year. So we start with FY20, go to FY22, and so on and so forth. The last 2 years are FY24, the revised estimate, which we got yesterday. And this is the new number, which is FY25, budgeted estimate. So let's start with the railway capex. As you can see, they're self-explanatory. 23, the budgeted capex for railways grew 7%. 24, 27%. The number for FY25 is 2%. Sharp slowdown, right? Let's move on to the next one. This is the road capex. This is even more stark. Take a look at the FY20 number, 11% growth. 22, 16%. 23, 15. The number that we got for the full year 24 yesterday was 28. And, just a 3% growth in expenditure on the road capex expected this time around. The next one will come up after roads. This is defense. Defense is a little better. 20 was very large, but then, it's kind of come down to 3%. 10% for this year, the revised number, and 9% for FY25. So defense actually is okay. But housing and urban affairs has also seen a sharp moderation. So no change in FY24 revised number, but FY25 budgeted expenditure here grows only 3%. right? FY23 number was 20% plus. So this is the comprehensive sort of, those four sectors that I mentioned, the total expenditure growth, as you can see, 23 growth 10%, 24, 22%, and the budgeted expenditure on some of the end infra markets like railways, roads, housing, urban infrastructure is only expected to grow about 4% or so. This is the total capital expenditure, because the earlier one was those four sectors, but this includes all the capital expenditure that individual ministries will spend on as well. And the number is on your screen. FY24 is 28%, right? It's in the 20s. 22 was 39%. The growth in FY25 is only 17%. So this is a sharp moderation that we are looking at. So where is the growth in capex really coming from? That 17% number that we showed, where is that coming from? Because none of these individual sectors like roads, defense, etc., are seeing that big a jump. The government has allocated 74,000 crores. The Ministry of Finance has allocated it for the Department of Economic Affairs for what they call new schemes. But we don't know what these new schemes are at this point in time. And there is also 30,000 crores which is allocated for loans to states on capex, etc. So this is where, but I mean, the increase in capital expenditures is about 1,10,000, 12,000 crores. And the bulk of it is these two items where this growth is actually coming from. But, is it possible that the government spends more? Although it doesn't seem very large, right? The numbers which they've budgeted for, it's possible. I'll tell you why. Because that 74,000 crores of new schemes, if it's not spent, if the government does not spend it fully on these new schemes, it can be diverted to, areas where spending is required. This is, of course, we spoke about all day yesterday. FY24 tax assumptions by the government actually are very conservative. So if you assume similar growth rates in tax receipts in FY25, if the FY24 base is large, then you actually, the tax kitty is much higher. The ability to spend will be much larger. And this is, a broader point, but it's important. What is sacrosanct and what the market liked very much is this 5.1% fiscal deficit target. So this will not change. But how the government gets to this 5.1% can change. And that may allow the government more leeway, more room when it presents the full year, the big July FY25 budget, to maybe increase spends on some of these sectors that I put out. Back to you.
All right, thanks a lot for that, Prashant. Well, joining us now is Harsha Upadhyay of Kotak Mutual Fund. Harsha, hi. Thanks for being with us on the show. It was, in some ways, a really good week for the market, right? It got what it wanted. There were no negative surprises in the budget. There was fiscal profligacy that was maintained by the government, and you had decent earnings, decent, numbers. The likes of two-wheeler companies did well in terms of numbers, etc. How are you feeling about the market here on? Do you think we can build on to our gains?
Clearly, the undertone continues to be very positive. While the valuations have moved up or still moving up every day, one needs to be really cautious with the kind of volatility that could come in for any reason as you go ahead. But overall, the delivery on the earnings front, at least up until now, seems to be more or less in line with expectations. But one thing what we have been noticing is the kind of exaggerated moves that are happening on the stocks, either on the positive side or on the negative side, in case there is some expectations which are exceeding, or if the disappointments are coming through in earnings. That shows that there are clearly two sections in the market. One is nervous about the valuation and hence whenever there is a negative news, just dumping the stocks. And the other set seems to be feeling the fear of missing out, and hence any small positive is also kind of seeing exaggerated news. So that shows that probably we are not in a trending market. We are probably close to an inflection point in the short term. But given the liquidity strength and the positive sentiments, it's very difficult to say where it will top out at this point of time.